the request that came through, you wanted to hear more about the financial inclusion, but more specifically the collateral registry, as well as the credit reference system. So all those are part of the bigger picture, which is the financial inclusion strategy that we have embarked on since 2016. I'll show it in my presentation. But the whole idea behind is to say most of our people, or most of the population, was actually marginalized, about 23%. That was in about 2014. And the aim was now to bring the level of financial exclusion to less than 5%. But we will see whether we were able to achieve that. How does the technology? So let me start by defining what financial inclusion for us means, so that when we do this presentation, you then understand where we are coming from. And when we come in with the collateral registry and the credit reference system, you then understand what it is that we are trying to achieve through these two products. So for us, it's the effective and informed use of a wide range of quality, affordable, and accessible financial services by all Zimbabweans on a sustainable basis, provided in a fair and transparent manner to formal regulated entity. And please take note, I'm saying effective and informed. I'm just coming out of the Platinum branch just now, and I signed an application form. And I said to the lady who made me sign, I said, I'm doing exactly the thing that I'm going to tell people not to do. And that is to sign either a loan agreement form or a product application form without reading the finer print. So normally we find ourselves entangled in debt because we took a loan from an institution, and then after some time they come to attach our house, and we are saying, but I was never told. And then the banker will say to you, here it is, you actually signed. But the challenge was that we did not read the finer print. So I'm talking about it's informed. So why do we need financial inclusion in Zimbabwe? You know that our vision as a country is to attain that upper middle income society or economy by 2030. And those are the pillars of that particular vision. But among those pillars of great interest to us is the one on inclusive growth. And for us to get that inclusive growth, financial inclusion becomes key. In every aspect, in every sector of the economy, the issue of financial inclusion becomes key. And we are also signatories to the 2030 SDGs. And financial inclusion was found to be an enabler in all those 10 SDGs that we have identified there. And as Zimbabwe, we thought that it was prudent for us to take financial inclusion more seriously. Moving on to the next one. So the challenge is that an inclusive financial system seeks to resolve. Why are we going the financial inclusion journey? According to the 2022 Zimbabwe National Census, the majority of our people, about 61%, they actually reside in rural areas. So that's most of our people. And just to say, about 62% of those are actually women. And historically, these areas have been largely delinked from access to finance. And like any other African country, historically, we were characterized by an enclave development model, which excludes the majority of the people. So you discover, yes, we have the majority of the people, but most of them are actually financially excluded. And so we are now saying Zimbabwe should transform to become a broad-based, inclusive, and sustainable development model, leaving no one behind and no place behind. And this collaboration that we are having with your association is one such avenue that we think will be able to achieve what we need to achieve. Just to give you an update on taking journey that we have traveled. So in 2016, we launched National Financial Inclusion Strategy 1, which was running 2016 to 2020. And at the end of NFIS 1, we then did a review of what we had done under NFIS 1 to see whether we had achieved the objectives that we wanted to achieve. And one of the major objectives was to increase access to finance by marginalized groups. And those marginalized groups included the women, the youth, the small and medium enterprises, the smallholder farmers, and the elderly. So we then looked at that review. We came up with a financial inclusion journey report, which is actually on our website. You can get the NFIS 1 and that journey report on our website. Then we started drafting an NFIS 2 in January 2021. But we say to ourselves, we need to come up with an informed, evidence-based strategy. So in order for us to do that, we then conducted 2 FinScope surveys with the assistance of Alliance for Financial Inclusion and also the World Bank. The whole idea was to see or assess or evaluate the effectiveness of the strategies that we had taken under NFIS 1 and to see whether there were any gaps and lessons learned from that, and then we can draft NFIS 2. So we did that. We got the results in July 2022. We did a stakeholder consultation, and I don't know whether there are any members here who attended our stakeholder consultations. It would have been very beneficial if at that time we had also included your association, because at that stage we were saying these are the results of the survey. And from these results, what do you think the policymakers need to do in order to improve access or to improve usage? So there's a difference between access, just being able to access financial services, and also being able to use those financial services. So at that time, we were looking at both to say, we have been focusing on access. How far have we also gone as far as usage is concerned? Then on October 31, we then launched the NFIS 2, and I brought a few copies, which I think those that are interested, you'll be able to get. This is our document, which we launched on the 31st. And this is sort of our roadmap for the next 5 years up to 2026. So under NFIS 1, those were the pillars. We had financial innovation, we had micro financing, we had financial literacy, and we had consumer protection. So we're saying these were the pillars. We are looking at these things and we're saying we want to work through these pillars in order to achieve what we need to achieve. If we move. And those are our target groups, as I've already highlighted. The women, the youth, the MSMEs, rural communities, the smallholder farmers, and the people with disabilities. We say while a person is disabled, it doesn't make them economically inactive. They can still do things, but they don't have access, and for various reasons, don't have access to financial products. We were working through about 8 thematic working groups at that time. Then we indicated, yeah, there should have been 8. We had the women, we had the SME finance development thematic working group, the youth, people with disability, financial literacy, microfinancing. Yes, I was looking for that one. Rural and agricultural finance development. That's a thematic working group that we identified was key, given that agriculture is the backbone of our economy. So we can move on to the next one. So those were thematic working groups. We implemented NFIS through those thematic working groups. Just to highlight, maybe while we are still there, you see item number 7 there on financial literacy and consumer protection. It remains key because most of the people, if you look at the survey results, our surveys, the MSME survey and the consumer survey results are actually on our website. We don't have printed copies with us, but they are on our website. You realize the majority of the people have no access or have not been able to utilize these financial services because they are not aware of those financial products. So there's a lot of consumer education that is required. And for some of them, they have no idea about issues of consumer protection. So those that want to take advantage of those people can actually do so, like the chimbazos. You can lose a lot of money, but most of the time, those people, no one really hears them when they speak. So we thought that it was an important pillar. And when you look at digital financial services, we are also saying in this day and age, that is a key driver to financial inclusion. So we can move on. So that's our stakeholders. We included the government ministries, we had development partners, entrepreneurs and communities, apex bodies like your association, financial institutions, other financial sector regulators. So it was more of a coordinated approach to financial inclusion. And this is what we want to carry on under NFIS. Um, so those are the initiatives that we did under NFIS 1. And the objective was to have improved access to financial services and also improve on usage, but the main focus was on access. We wanted people to have access to financial services. And initiatives that we did to enhance access included development of those innovative financial products and delivery channels. The surveys actually indicate that mobile money played a critical role or a very big role in enhancing access to finance under NFIS 1. We had regulatory sandboxes, I don't know whether you are aware, at the Central Bank, where we allow innovators to innovate within financial innovators to innovate within a regulated parameter, whatever product they want to put across. We also registered the Women's Microfinance Bank after taking note of the fact that women are financially excluded. And when you go to the banks, you see, women are unique in the sense that we want to try and multitask. I want to be a business person. I want to be at work. I want to be a mother. I want to do all those things. So we were looking for an institution that was user-friendly, where you could go in there with your baby and be able to get a room or something where you can breastfeed your baby, where you can change the diaper and still be served. We also encourage our banks to set up SME desks and women's desks, because some of the women are actually afraid of the soot and the high rising buildings. So that was another thing that we did. The credit registry, we'll be going into that credit registry as well as the collateral registry. The warehouse receipt system, I'm sure your association is aware of it. Then also the KYC, low KYC requirements, where in the past you needed a voluminous heap of documents in order to open an account. That was reduced maybe to just your ID and proof of residence. And then in terms of increasing usage, we have credit guarantee scheme. I don't know whether you are aware that the Export Credit Guarantee Company is an MSME guarantee that can guarantee smallholder farmers, that can guarantee MSMEs where you don't have sufficient collateral and you want to access a loan from a bank. So you go through your bank, the bank assesses the collateral that you have. If it's sufficient, they can apply to the MSME guarantee at ECGC, and ECGC can cover that. Financial literacy, we started, we issued, we have a framework that we are about to issue. We can move on. Those are some of the initiatives that we also did. I've talked about the MSME guarantee. Financial literacy programs. Those programs were done not only by the central bank, but we worked through our partners, including the banks, including development partners, including microfinance institutions, to actually increase the level of financial literacy in the communities. And then we can move on. What lessons did we learn from NFIS 1, which we incorporated, or where we tried to draw and say, okay, from these lessons, what can we do to change things under NFIS 2? Effective stakeholder coordination, where you need everyone. Because like we are now, you have certain needs that are peculiar to association and to the people that you represent. And those needs are different from maybe someone representing just the women's group or the youth. So stakeholder coordination, bringing everyone together and saying, what are your needs? What do you think we should do? What can you do? Robust monitoring and evaluation framework is critical. And under NFIS 1, we've actually drafted, we now have a draft M&E framework in place. Entrepreneurship, capacity building and development. We noted that where we have so many of our people that are doing businesses, particularly in agriculture, you discover that they lack the technical skills. So how do we make sure we are a financial institution, we are a central bank? How do we then make sure that they get those technical skills? Which takes me back to the first one, effective stakeholder coordination with those that are doing capacity building. Rural outreach, I think I've already indicated that one. Then also issues of communication. Some people were not aware of the National Financial Inclusion Drive because it was not communicated to them. But under NFIS 2, we will be talking about it. We will be on radio, we will be on television, we will be everywhere. You can invite us to your community so that we can speak to your people about financial inclusion, so that they understand where we are coming from and where we want to take the people. So from those lessons and from the FinScope survey, we then say what were the results of the FinScope survey. So the first slide will show you the general overall access. So if you look at that under the overall, right at the other end there, in 2011, we were at 40%, they were financially excluded. That was reduced to 23% of the adult population in 2014. So in 2014, we used data as at 2014 to come up with the NFIS 1. And our aim had been to get to 90% financial inclusion, but we managed to get to, now the excluded is about 82%. So we are not yet there, but I think we have made significant progress. The next slide will show you, okay, so on this one, we are simply comparing the urban and the rural. And obviously you can see that in the rural population, the level of exclusion is actually much higher than it is in the urban areas. But overall, financial inclusion, as you can see, in the urban areas is at 94%, the rural areas it's 79%. And that's by gender. And you can see that we have actually managed to close the, but we've managed to close the gender gap as far as access is concerned. Because now when you look at those that are financially excluded, the female, it's only 12%, the men, it's also 12%. However, when you look at the percentage of the population that is banked, the women are at 43%, the men are at 50%. When you look at the ones that are using other formal or non-bank, women are at 40%, while the men are at 35%. And move on. So this is the information that we then use in order to come up with our NFIS 2. And that diagram there represents our NFIS 2. And our vision under NFIS 2 is to empower all Zimbabweans towards building a resilient and sustainable livelihood through access and usage of appropriate, affordable, sustainable, and quality form of financial services in line with the national development aspirations. What we have tried to do with the financial inclusion, because remember at the beginning I said, why do we need financial inclusion in Zimbabwe? We are now trying to link our financial inclusion to the development aspirations of our economy. We are linking it to the national vision. And our target group, they remain the same, except that this time around, we have included the pensioners and the elders. So you may realize that most of us maybe go on pension at 60 or 65. Does it mean that at 65 you are now economically active. No. In fact, you are now able to do what you never used to do before. But it's at that stage that we realize most of the people at that age, they actually don't have access to finance. They can't borrow because there is no more, the employer can no longer guarantee, there's no salary. So we have included them under NFIS 2. In terms of our pillars, financial innovation remains there. We have put together consumer protection and financial literacy, financial capability. So it's no longer about financial literacy, but financial capability to enable someone to make an informed decision, an informed financial decision, as opposed to just being told, can you read the finer print? And then we have put together microfinancing, MSMEs, entrepreneurship development as another pillar. Remember, I said we noted that there was no skill, and then we have the devolution. So we can move on to the next one. Our thematic working groups under NFIS 2. So the women remain there. MSMEs and entrepreneurship development, the youth, people with disabilities, the rural and agricultural finance remains there. Digital financial services, financial literacy, microfinance, insurance, and then we have a new group, the pensioners and the elders. What are our expectations? Financial deepening through increased uptake and usage of quality customer-centric financial products. So we are saying at the end of 2026, we should be able to see those two results: financial deepening and improved livelihoods and financial capability. People should be able to make financial decisions from an informed position, and that should facilitate improvement in their livelihoods. Those are our focus areas. Increase usage of formal financial services, and also to increase the range and quality of financial services and products. Enhancing sustainable finance, and also issues of intensifying financial literacy and consumer protection. I just thought that was important information for your association. We are basically agro-based, and from the fiscal surveys that were done, agriculture contributes 16 to 20% of the country's GDP. You also contribute 60% of the country's foreign earnings, and you account for 61% of full-time employees within the agricultural sector. Contributes more than 60% of inputs to manufacturing sector, accounts for 39.2% of MSMEs, and also sustain livelihoods to 80% of the population. This is according to the 22 fiscal consumer survey. And like I indicated, 58% of the Zimbabwean population is actually involved in agriculture. We can move on to the next. We also noted that, so we did an MSME survey, but we noted that only 52% of MSMEs in agriculture are banked. The rest are not. 61% of MSMEs in agriculture do not save at all. In fact, the results will tell you that 1% actually saves with banks, and other difference either with informal services or something, cooperatives, Shimbazo. Only 27% of MSMEs in agriculture have insurance. And most of this insurance uptake is largely driven by funeral insurance. So insurance against drought, insurance against any disasters as far as agriculture is concerned, the majority of the people are not insured. We can move on. So those are some of the challenges that we identified, which we are trying to or seeking to address under NFIS 2. Low levels of financial literacy, I've already alluded to that, but let me go to the ones that are of particular interest to us today. The last one there, lack of acceptable collateral security. That is a major problem, particularly for this particular sector. And then the other one was lack of credit, credit history. So the banks are not able to assess or evaluate your credit worthiness because you have never borrowed. You have never had a financial or an account or anything, so they can't. You go there, you want money, but they say we don't know you. So those are some of the challenges that we are trying to address under NFIS 2. And move on. So when you look at the financial sector, they will tell you that we have challenges. There is issues of risk, collateral requirements that keeps coming, either from the borrower or from the lender. The lender is saying, I want collateral because I'm dealing with depositors' funds. These are not my funds. And the borrower is saying, I don't have the collateral, but I think I've got a bankable project. Can you take it? So that still remains a problem. And you'll understand why the Reserve Bank then came on board and said, no, let's come up with a collateral registry. Highly informal, I think what we noted was the majority of the MSMEs are not registered at all for various reasons. Some of them are afraid of tax issues, so they would rather remain informal. And because they remain informal, they cannot access banking services because they have no license. They have no fixed place of where they are operating from. Poor network connectivity, sometimes in the agricultural sector, absence of ready off-takers for their products. So you end up maybe in some cases side marketing taking place. So what are we saying? And move on. In conclusion, I'm saying the establishment of a robust credit infrastructure covering the credit reference system, the collateral registry, and the MSME credit guarantee is key to increasing uptake and usage of financial products and services by smallholder farmers. And when we have done that, it still remains important to have effective coordination, collaboration, and taking ownership of the financial inclusion initiatives by all stakeholders. This is critical in building an inclusive financial system. I thank you. I read this, if anyone wants them at the back then.
So, Mr. Mashosha, what would be the next presentation?
The next presentation, so that conclusion there is leading us to the two products that we want to talk about today, and that's the collateral registry and the credit reference system. So I'll ask my colleague, Rosai Chiviri. He's also a deputy director in bank supervision at the Reserve Bank, responsible for our management information systems, and he will present to us on the collateral registry and the credit reference system. Thank you.
Thanks, Mr. Mashosha. Mr. Chiviri, please take the.
Good afternoon, ladies and gentlemen. As indicated, my name is I so at the Reserve Bank. She says I'm one of the deputy directors there, but nothing spectacular. I think almost everywhere you go, find someone something. There's very little effort involved. I only need to have nowhere else to go, come get a view. and then you deputy something, and that is my position. So Mrs. Mshushu was talking about financial inclusion. Let me indicate to you that the financial service sector that we oversee is predominantly banking institutions. Because then we have the microfinance institutions. In the banking institutions, the biggest item on their balance sheet are loans, starting off at around 60% of the balance sheet, 5%, 80%. So that would also inherently mean that the biggest risk on the balance sheets of banking institutions default risk. That is the implication. And what we have realized at the central bank is that we need to come up with the appropriate, we call it credit infrastructure, to facilitate effective lending by our banking institute, because their biggest asset are loans. And when we go deep inside the operationally, we find that in the loans, which are 80%, 75% of the balance sheet, we have the personal loans, education loans, agricultural loans, loans to the tourism sector, mining sector. Some of the loans would be in foreign currency, some in currency, so it's a mixed bag. So that is the balance sheet of a banking institution. And I think you know as much as I do that there is a relationship between finance and the growth of our economy. So the infrastructure that we are looking at, credit infrastructure, becomes key. And I want to go a little bit deeper. I didn't say much, but I think from a conceptual point of view, you will be able to appreciate what we are trying to do, various productive sectors of the economy. But let me start off to indicate that we have a credit registry at the Reserve Bank. It is at the Reserve Bank. And we have private bureaus, credit bureaus as well. So in Zimbabwe, we have a hybrid approach where we have a credit registry. If you look up, you will find that the credit registries are usually run by the authorities, central bank, like in our case, for example. Then there's the private sector where you have the, in our case, we have the Financial Clearing Bureau. You must have heard about them. We have another one called the XDS. There's a South African franchise. We also have another one, it's called FinCheck. Previously, it was TransUnion. Before then, it was called Dun & Bradstreet and on and on. So those are the private bureaus. But the credit registry, we started on it in 2016. Went through a lot of processes, benchmarking with the other predictions and best practices, getting technical assistance from the World Bank. That's what we try to do, and it's quite a lot of work involved. But one of the motivating factors was also that so one of the motivating factors was that around 2014, remember the balance sheet of banks which I talked about, the loans which constitute about 80%, about a fifth of them were bad on the balance sheet of banking institutions. And I suppose you must have directly or indirectly been affected by the failure of banking institutions that have happened previously in our market. So we had so many banking institutions. I think when I started the Reserve Bank,
with about 40 banks. We now have just 19 banking institutions. A number of the institutions used to know were closed. One of the major factors was the non-performing loans, meaning the loans which they were granting to their clients in the various sectors of the economy were not performing, probably because the various economic sectors were also not performing. So then it is transmitted to the balance sheet of banking institutions. And when they fail, we wonder what has happened. But at that point, about 20.45% of the loans that were on the balance sheet of banking institutions were bad. And that prompted us to look at how we could enhance the credit infrastructure in our economy. The credit infrastructure is more or less like the road networks that we have. We play a facilitatory role. Because at the central bank, we don't lend to the various sectors of the economy, but we create the environment that promotes effective lending by the banks. So the credit registry is one of those infrastructures. Just like your the RTGS, everyone knows about the RTGS. So the RTGS is also an infrastructural component. We promote the smooth payment systems in the country. So in the credit registry, what we are trying to do there is to create a repository of the payment histories and the payment patterns of clients of banking institutions. So periodically, banking institutions supply information to the credit registry. And we have an information system that then concatenates that information. And you can retrieve reports on the performance of your counterparties. So this can be done. So in the background, banking institutions do check on you when you approach them for a loan. And at the credit register, we have all the loans that are in the banking industry and the patterns of repayments. If you skip, we'll be able to see. Not so long ago, we also realized that some accounts at the clothing shops, Topics, which is the other one, Truex, whatever. They are also already in the credit register. So if you have a clothing account somewhere, please know that you may already be in our database. Well, I don't know because we are here at CAPS, I can indicate that I think there are some working arrangements between the clothing shops and some financial institutions. And the financial institution then end up submitting that information to the credit registry. So some people have come to the central bank to say, I've been referred, let me say, by CAPS to come here and get my consumer report because we issue reports to the consumers. But I've never borrowed from a bank and I wonder why. But then the banking institution, which is working with the Truex, submitted the information to the credit register. And I think it works very well because a good credit culture serves everyone. I want to move on to this slide to indicate that what we've been doing is supported by legislation. We have an amendment that took place in 2015 in the Banking Act. Then there's also an amendment in the Reserve Bank Act. So in the Reserve Bank Act, we were saying the Reserve Bank should establish a collateral, a credit registry. Then to the banking institutions, we were saying they should submit information to the credit registry. Those were the amendments that were taking place. And we are guiding institutions. We've issued some circulars and all that, but I want to move on. So here I'm just also trying to indicate to you what I mentioned earlier about us having the credit registry and the private bureaus. And we like that environment because what the private bureaus have been able to do is in some instances beyond our scope at the central bank. Like if you go at the Financial Clearing Bureau over there, it's the oldest, I think they were established in 1988, and their records are around 16 million. So it's nearly the population size of the country. At the FinCheck, I'm not sure exactly, but they could be around 1.3 million or so, same as XDS. At the credit register at the Reserve Bank, we have nearly 2 million records. And this is a very rich information on the on yourselves and on your counterparties or any potential clients that you may approach you. And the Financial Clearing Bureau, for example, has tracked insolvency cases. Even there's some cases that have gone to the courts. They are all there. If you inquire with them, they can retrieve all that information, and it goes back into history. Then the XDS, what I know is that they are very good at collecting information in the agricultural sector. So they have some special information which we don't have at the Reserve Bank in the credit registry. Then what we started off at the credit registry is information in the banking sector. So anybody who has borrowed in the banking sector, their information is warehoused in the credit registry. And we feel our banks are benefiting from that because the information coming through feedback that we get is that it has been effective. One time we had a workshop at the central bank, and senior official from one of the commercial banks approaches me and says, "Chiviri, do you know this credit registry has been very helpful?" Then I said, "In which way?" Then he says, "You know, recently we were approached by one of the big spenders in our market. You know, those people we know the names and we associate them with a lot of money and things like that. So you wouldn't think they would default or anything." So the gentleman approaches the bank for a loan. Then I think the officers, the operational officers, they push the papers for approval until one guy just decides to check with the credit registry. And they discover that there are a lot of other loans that are outstanding in the market. So, but you know, because he's a big spender, we think that he's also able to pay promptly. And so this is the feedback that we are getting from our institutions, and the credit registry is accessible by the banks, almost by anyone, and even the individuals and companies out there. They can approach the Reserve Bank to get their own reports. We call them consumer reports, and we don't ask them to pay anything for accessing a consumer report. They are entitled to you, or we are entitled to get your report on the information that we are holding on you. So the information is available. We just need to confirm that it's yourselves. We are giving the right person, then we issue out the report. I want to move on to my other slide, just to indicate how the credit registry operates. So it's a web-based system. It's an online portal which requires internet connectivity. So the banks or the banking institutions would need to connect to submit the information, also to retrieve the information. We also at the Reserve Bank, which is slightly different from the private bureaus I mentioned earlier, is that we collect both the positive information and negative information. So we say we don't blacklist, we just display the payment pattern of a client and the payment history. So the decision to lend is for the bank. So we just, if they want to retrieve a report, they do. They key in your ID. If it's a company registration number or the tax number, the BPA number, then they retrieve the report. So when they get access to the report, then they decide whether they can proceed or they would rather not go with you. Then we also add the other details that says it's well, of course, we use the unique ID, which is the ID, so that if you have so loans at Agribank, at CABS, at Stanbic, and another banking institution, the system goes around the entire database looking for that ID, and all your borrowings are put in one report. So that's how it works. So nothing really sneaks through. We are able to see all the loans in one report, and the banking institutions are also able to see that. But the only difference between the consumer reports and the reports that are accessed by the banks is that banks are not able to see who else you have borrowed from. They will see you have a loan, and maybe it's performing well or it's not, but they don't know who you borrowed from. It's intentional. But when an individual approaches us for their own report, then we give you everything, including the banks you have borrowed from, when it's all available to the consumers. Let me move on to my other slide. Just, this is the importance of credit registry. I used to have an angle back in the village where I grew up, who would not borrow anything from anyone. Neither would you any of his tools around the homestead. I could relate to that later on when I was in high school and we were reading Shakespeare's Hamlet, where one of the characters said, neither a borrower nor a lender be. I don't remember who it was now, but it has been, I was in school a long time ago. But neither a borrower nor a lender be. And the essence then was, because you would lose the loan and you would lose the friend. Yeah, that was the thinking that. But now with the credit, it very easy. Information that we maintain promotes financial stability. Ms. Ntosho was talking about that. Then also adverse selection. Information asymmetry. Where I grew up, like I indicated, do find that if anyone borrowed anything in the village and they didn't return, somehow the widow would travel and people would know that I know she borrowed something, but then she didn't like that. And people would end up knowing, and then they would be careful when dealing with someone. But that issue of interest in the financial service is being addressed through the credit registry. They just need to go onto the portal, retrieve the information in there. It's not like in the video where the word would travel by or something like that. But now we have a collateral registry. Then a lot of other benefits for the financial institutions, sound risk management and all that. I want to indicate it to you. I am not sure if members seated at the back would be able to see this, but this is the trend line of the records or the utilization of the system since we started. So it continues to grow. Where we are now is like our database has been 70%. That's where we continue to find that we are now in our going to our second phase, because we're initially focused on the banking institutions. We want to focus on the microfinance institutions also, because microfinance institutions do disburse loans. They are relatively small, but also very important. I was saying 19 banks. We have around 200 microfinance institutions. So materially, when you look at the numbers, they're a material sector, and they loan. So we want them on board as well, because whatever happens there may have a relationship to what is happening in the banking sector. And I want to move on, but I've talked about this already. Someone is borrowed and paid off. We would say even if they don't have tangible collateral, they have reputation collateral, or they have a good name to themselves. And some banking institutions do lend on that basis. So we are able to create what we call reputation collateral. Then we also increase access to credit. Ms. Ntosho was talking about access. Then also reducing delinquencies and defaults, because the institutions that lend also able to make sound decisions. I remember when we were still exploring, we did a tour to Mauritius. They told us that when before they introduced their own collateral credit registry, the non-performing loans, they were around in the 30% of the banking sector loan book. When they had implemented, at the time we visited, they were around 4%. I told you earlier that we were at 20.45% in 2014. Now you ask me, we are around 1.72% in non-performing loans. And we attribute the decline in the default rate in the banking sector, partly to the credit register. Let me move on now to the collateral register, which is the other aspect that we just want to quickly discuss. So the collateral registry is also a repository, but this time we are registering the collateral that has been accepted by the banking institutions. We are registering, let me say, movable collateral, because we have the deeds registry for the land and buildings. You know that, I am sure. So the deeds registry is there. It continues to register land, buildings, the title deeds and all that. That's what the deeds registry does. And we are in communication with them. We do interact. We feel at some point we'll be able to share ideas as we go. The collateral registry, the banking institutions do take a movable collateral. Motor vehicles, for example, the industrial machinery that would be considered to be movable. Sometimes they even take what are they called? Accounts receivables. Those who may have a banking background would know about notarial general covering bonds. So that is what we register in the collateral register. Well, the challenge has been that, especially in the microfinance sector, if you needed a loan, they want you to tender your motor vehicle or the fridge or whatever it may be. But that is also maybe what you need to conduct your business. So with the collateral register, we think that if we create a record of all the movable assets that has been accepted by the lending institutions, and everyone is required to check before they can take the movable collateral, then there's no need to physically possess the movable asset, because everyone else is required to check before they can take. So even the borrower wouldn't be able to move from one lending institution to another, because the other lender would look up and they discover that an interest has already been registered in the collateral register. So we are looking at so you know, when we started off on it, I wasn't very convinced. But then around that time we did what do you call it? We did an assessment across the country, especially of the microfinance institutions. You know, the microfinance institutions are a tricky lot. They are very elusive sometimes in the way they operate. So we did a nationwide. So some teams were sent to Mtare, Gweru, and the other places. And I was in the team that was going to Masvingo there, which is also my home area. And we were asked to branch off to Mondoro, Mbaira. It's a small place. So there was one institution there, and they are lending to the surrounding community. One day, talking to the officials of that lending institution, and we asked, do you have any lending policies? No, they don't have. So the collateral, do you take any collateral? What if someone defaults? No, they don't take. And you know what surprised me then is they said, no, when we are lending out money, all we do is to pray. So we pray that we lend it properly. Then I said, what about the defaults, recoveries? Then they said, we also pray for recoveries and the repayments. Then I realized that they were in a community that collateral was available. It could be the cattle or whatever, but they were not taking it, and there was no system then or infrastructure to facilitate that. Then when I came back to the office, I realized that we had some work to do about creating a registry for the collateral as well. So then we started on it. Let me move on to my next slide. Here I'm just talking about what it is and what it's supposed to do. So we say it allows the use of movable assets as collateral, and we are providing a registry system for that. I want to move on. Maybe at the bottom there, I can just emphasize that if you go back, in the industries, what we realize is it is the individuals, the households, and the small enterprises that do not have the land and buildings, where they don't have premises as such, and sometimes they're very mobile, very nomadic. They move from one place to another. If there is a gap somewhere, they quickly move their machinery to the other place, but they have the machinery. But the banks are not accepting that because there is no system for it. So the benefit we think it will be to the households, because that's where we have even out there, farmers with the cattle, farmers with the crops. They have their vehicles, the tractors, combined harvesters. They can register them in the collateral registry system. And when we started, it was around 2015. Then we had our Act in 2017. Then we did it was a very long process. I think like everywhere, it's like a very big but slow train. But ultimately you get there. So 2015 we were starting with. Then when the laws went to parliament, you would wait and you would very little that you can do about it for the laws to move fast. And then you get a bill. Then the bill goes for consultation and all that. Then then we have an act in the end. But we have been successful in this regard. Then when we got a command that is supplying us with the information system, then we did consultative processes with our banks, with our MFIs, even the SMEs. There are a lot of other associations out there to do with SMEs and on and on. We worked with them. Then late last year, we launched the system. Then we have a statutory instrument that would accompany our act there. It's a statutory instrument that was issued on 4 November. It's called the commencement statutory instrument, because the act says the president would issue a statutory instrument on the commencement date. So we have since started off. I want to move to my other slide, and this is the purpose. I suppose conceptually I've been able to explain to you what we're trying to do. So the financial institutions would accept movable collateral. And I think it's very critical to support industry, like I've said earlier on. The last week of December, I went to Masasa, purchasing something. And I got there, there's a small company that he does some manufacturing. And the gentleman says to me, we have had a problem. We can't access loans at the banking institutions. That I said, no, you have all this inventory, and banks will be able to lend to you against the inventory, because you're already busy trying to distribute this, and your items are in Blawayo, in Harare, Masvingo, everywhere. So this is the stock that is already moving. But he says, no, the guys at the banks do not quite comprehend what you are trying to do. We could even sell to Botswana and South Africa, but we can't export because we don't have capital. But I could see the opportunity if the financial institutions they are dealing with would appreciate that the stock can also be collateral that can support that particular industry. So that is what we think the collateral registry will be able to do, because we have created a registry, and the registry, the lending institutions, both the banks, MFIs, and everyone else would be able to look up a collateral that is presented to them before they accept it. If there are no encumbrances, they will be able to register it. if we, for example, the collateral is let's say cattle, and someone has already taken some cattle, you have at your farm, you have say 1,000 cattle, and the loan they gave you maybe is equivalent to, let's say, 100 cattle. Another lender would be able to come in as well and give you a loan in addition, because there is a buffer over and above what you have been granted. So that's what we believe would be happening as far as the collateral registry, and our banking institutions understand this. We are on an ongoing engagement with the banks. Therefore, since it started, because we launched the end last year, the institutions are busy creating, upgrading their system, priming themselves to register the collateral already. I want to move on. So these would be the benefits. We've already talked about some of these, improving access to finance, because the SMEs I mentioned, the individuals, we're failing to access maybe loans for their businesses, because the collateral which they have is not readily acceptable by banking institutions. But because we've created an infrastructure, a registry, that would register your interest in the movable asset, and everyone would be able to see it on the notice board in the collateral registry, we believe it will be very helpful. Then we will also talk about promoting financial inclusion, which Ms. Mshosho talked about earlier on. Again, here we are saying registrations or the accessing the system will be is online, so it will be anytime. No need for physical possession of collateral. And in those instances where lenders were taking the assets physically, they would need to do anything, because the storage is the notice board that we have in the collateral registry. Well, this is the various types of vehicles, agricultural produce, and on and on. The list is limited by our imagination. The banking institutions would just need to come up with policies on what they are able to accept as collateral. And we, in the laws, and then the Reserve Bank, we're not prescribing. It is up to the institutions, because some banks have maybe strength, let's say in the agriculture, so they know how to monitor agricultural projects. Others are strong in say mining, for example. And we know our institutions, they are in various strategic groups. So they are strong in various areas. So it's up to the banking institute. All we are trying to do at the central bank is to encourage them to upscale their policies and accommodate the movable assets that are available in the various sectors of our economy. I want to move on. No, this is progress. So of course, I told you about us having launched, also the training of banks and MFIs. We shall be engaging with also the ultimate beneficiaries, such as the SMEs themselves. I'm indicating there that the banks and the MFIs are already creating their profiles in readiness to start the registrations. Then there are other regulations that will issue in due course. Thank you very much. That's what I prepared for discussion today. Yes, I want the gentleman to try to play a small video here. If it works, then we will celebrate. And if it fails, I will be able to share it on email.
So we'll just play the video and then maybe we'll do a question and answer session. I think we've received quite a lot of content, and I'm sure there's some questions.
Possible if we could surprise. I think the sound is working. Okay, but your laptop will have sound. No, it's okay. If you increase your volume, we should be okay.
Sure. Okay. So maybe let's do some questions and answers while Tony's trying to get the video. So are there any questions? This,
one I would want to say that everyone will come to you and that's the procedure of being able to. So thanks very much for that. You don't need very much to access your consumer reports. So the consumer reports are for the data subjects that are in our system, the borrowers. It may be a company, even an individual or an association out there that is borrowed from a banking institution. You are entitled to receiving a report on yourselves. That is on the information that we are holding on you. So the individuals can come, the companies can also come, and we issue those reports for free. All you need to do is maybe reach out via email or through the phone. But what we try to do is to ensure that we are giving the right person. We wouldn't want your neighbor coming to us and pretending, then we end up giving them. So we may sometimes ask for your ID, others are able to come through, but just to indicate that we are working on an application that would allow individuals to access their reports on a mobiles. We are engaging our software supplier. We started that was around September last year. So we are working with them so that we can have a mobile app to access the consumer reports for individuals. If you are well out of town, say in Chires or whatever, you can go to your banking institution. They will assist us to identify you. Then we send you to your email. Yeah, the identification part for us is very critical. We wouldn't want to cause civil wars out there.
I think there's a question
Yes.
on
Thank you so much. Victor Broma is my name with the Confederation of Zimbabwe Industries. Trying to find out on the assets register, what do you do in terms, there are assets that change value over time. So if we take, say, for example, a motor vehicle, 2 years ago, probably that particular vehicle on the world market or locally, it was worth 25,000. So one bank or one institution is holding on to that particular asset, but then the value is now changed on the market. Someone wants to access credit. What do you do in terms of revaluation of the assets that are already probably in the register?
No, thanks very much. Let me address that. So the banks already have systems to handle that when they are giving you loans. So if your vehicle is worth $25,000 today, they would not give you a loan that is worth 25,000. They apply, what do they call it, a haircut. They probably may give you maybe only 75% of the value. The haircut is to take care of the depreciation that may then take place. But they also have their own, as part of their risk management systems, a process of revaluing assets which they have taken as the collateral. So they, even if it's the crops, even at your industrial companies, the banks have systems. They even visit you. They do a site visit to see what is happening. If you are cultivating some crops, they come. If you are into animal husband, they also come. Some teams from banking industry would go to do assessments. So even if there is a drought, they will know that we may have a problem with this particular company because they would have been to your farm already. So for assets, they usually don't give you the full value as a loan. They apply a haircut. That haircut addresses the depreciation that may happen between the granting of the loan and the ultimate repayment.
So maybe we just pause the questions. I think it'd be useful for the RBZ team to know who's here. So maybe it's Victor, isn't it?
Yes.
And then from Petrus, if we can go sort of row by row. So.
Zimbabwe. I don't know what was that. So let us know the DCA. Max, then we got DCA.
Leads.
I got from the lead. What is DCA? Oh. What is lead?
Lead is lead. Alex.
Alex Cart, FAO. I hope you all know what that is.
Units to Millibrand Division Exemplar Holdings.
Mark Benson, World Vision, Wisdom Spice Christian Age. Policy reviewers, the agency. The live one for the whole of this place.
Steve Griffiths from Burima Machinery.
Sakile Kulita from Harvest Plus.
Emmanuel Direct Technology. Long time, I think we said.
This is the training group. Somebody else in the Multicultural Development Council.
I'm just going to find it on the
Okay.
last Kennedy farm shop.
So RBZ colleagues, you can appreciate there's a good mixture of different types of stakeholders here. I don't have any questions coming from the floor. I was wondering maybe RBZ with sort of a rich mixture of organizations here. Do you have any questions maybe on sort of the uptake of these different products? How they might be better taken up, anything like that?
No, so thanks very much for that. Like what my colleague said earlier on, we believe that this is only the first steps of a journey that is going to be very fruitful and enriching. The wide spectrum of stakeholders here is very critical to us. Ms. Mshusho indicated that later on you will be able to see some of our communication and the awareness brochures, messages on radios, and I'm convinced that you will be our ambassadors as well. Where you come from, you give feedback. I've already seen some institutions we have interacted with before in the past, and I think this should go on.
Thank you. So Mrs. Mshosho, yes.
What my colleague has said is to say, like I indicated earlier on, I think this is one group that we would like to work with under the financial inclusion strategy. You'll be able to know or to be aware of some of these products or initiatives by the Reserve Bank, like the one on collateral or the credit reference system, earlier than maybe everybody else, because you'll be part of our stakeholders. And we would appreciate those that are interested to come in as an association or even as individuals. We also want to partner with you. We want to visit your various, if you're a farmer, we want to come there. We want to just take a look at what you are doing. We want to showcase what you are doing. If you are part of the value chain in the agricultural sector, we also want to see what you are doing, because we want to tell a story.
And of course, they're well represented here as well, whose mandate is to support, in this case, smallholders, and a lot of financial inclusion training going on through those organizations. Yes.
And I think under MFIS one, we had a lot of these development partners, for example, how I think it's an initiative that they were doing in should have been Manicaland, which was very successful. And we had a meeting with them to see whether it was possible to replicate that same initiative in other areas of the country. So development partners are actually one of our key stakeholders.
I was wondering, as you were speaking, you mentioned capacity building. Do you have materials that maybe development organizations could use to further your reach, or is that sort of in-house?
So what we were doing under NFIS 1, like I indicated, we were working together with our implementing partners. For example, FAO actually developed some, I hope there's a representative here from FAO.
There is.
Yes. They actually they prepared training material, which they said to us, we can actually hand over this training material to you, and if we are not able to go on with this particular project, you can then find ways of making sure that you make use of that information. So what we have done is to engage experts in training in various areas, for example, business skills, entrepreneurship skills, those development partners. So we bring them together and we target a particular sector or segment in terms of capacity building. And that's one of our initiatives under NFIS 2.
Thank you.
And any development partners that are into capacity building, please get in touch with us. We want to work with you.
So I'll circulate the contact details to members. Godfrey, you have a question?
Yes. When you read the literature on financial inclusion, you're beginning to see people talk of financial health as an aspect that is needed. Where are you going?
If you look in our financial inclusion strategy, and when you talk about issues of financial capability, those are some of the aspects that you are bringing in. You are not just looking at the literacy part of it, but you are looking at the entirety of financial health. So it's actually part of what we are doing under NFIS 2.
Thank you. Any more questions? I've got one here from, yes, this one.
I was just interested in the part of our intention as a development in terms of financial inclusion. I just wanted to ask, like, how far are you going in pension, especially those who development and they're already immediate, so you can't apply it to so you're already a pensioner, but you're still in debt. Like, how do people like that get help?
So this particular type of book, we added this book under NFIS, which was launched 31 October. We are yet to, what we are doing now is we are trying to look for stakeholders within that particular segment. We know we have the NASA, we have public service, but we are also looking for representatives of pensioners and organizations that work with pensioners and elders or elderly, so that we hear from them the challenges that this particular group is facing and how we can then put our heads together and say, how do we help them? Because like I indicated earlier on, when someone retires and others retire at 55 or retire at 60, they are not, we are not saying they are no longer economically active. In fact, they are very active as far as, they are economically active. So by pulling them out of the labor market, and there is no salary to back their borrowing, there is no employer to back their borrowing, we are actually sort of thrusting them into poverty. And their lifestyle actually changes almost immediately. So we are looking for the stakeholders, particularly for this group, because it's a new group. It's a new thematic working group. And we would welcome any one who wants to join that particular thematic working group so that we can start it together.
Thank you. Yes, sir.
Okay, I have two wishes.
Mm-hmm.
Not questions. One is at policy level, hoping that under National Financial Inclusion Strategy 2, we have some form of consistency in terms of policies. In the presentation that was done earlier, one of the drivers was mobile money for financial inclusion. But at some point that was disrupted because of changes in policies. So we are finding ourselves now going into National Financial Inclusion Strategy 2, retracing our steps again to get people to get accustomed and used to mobile money again, being able to use it and having a positive attitude towards it. I'm sure we all know some of the disruptions that happened along the way. Then number two, by which number two is on insurance. One of the thematic areas that you were talking about is on rural and agriculture financing. And under that, I think we also need to focus a lot on medical insurance, especially for smallholder farmers. Given the challenges they are facing with January disease, climate change related issues. So what can we do in terms of them accessing insurance products? So one of the insurance products that we are talking about there, which has been the major driver of those figures, is actually life insurance or life assurance. So for people, especially in the rural areas, if you ask a question, are you covered in terms of life assurance? The answer is yes, because I have a mother or a grandfather who is seated somewhere there in Mashigo, in my home, and that person I have covered under my own policy, and so they are covered. But in terms of their immediate needs, in terms of health insurance, livestock insurance, that I think we are still way behind. So if we can push on those, so those are my two wishes. Yeah.
Okay. No, thanks very much. We've taken note of that, and my colleagues who are directly in the financial inclusion section who have captured it. So we'll look at that. I know the issue of policy inconsistency sometimes can be very tricky. Our institution, I think, tries its best to work with the fiscal authorities, then also on our side, on the monetary side, and make sure that we try to make the ship as stable as possible. But sometimes the itch may be coming from there, then over there, and we have to scratch somewhere. So it is a balancing act, and it can be dynamic and fluid. But the overall objective is that we should have a stable environment, and that also promotes the policy consistency.
I think that's why one of the key stakeholders financial inclusion, right? And they have used the information that came from the fiscal surveys to actually strategize as far as financial inclusion is concerned. And like I indicated, funeral assurance is probably the major driver in the uptake of insurance according to the surveys. So it's one of the key areas that we are looking at. And I think IPEC has started licensing micro insurers to make sure that the target market that normally cannot access the conventional insurance companies are also able to have access to new insurance products. But it's an issue well noted.
Thank you. I've got a question here from online. How is the current 200% interest rates aligning with the financial inclusion strategy, especially looking at rural farmers and households, and that banks are only offering short-term loans? I think those are the scratches and itches that you were talking about. But would you like to respond?
No, thanks very much for that. When the policy about the interest rates was announced, because we have several markets, so to speak. So there's the local currency money market. Then we have the foreign exchange market. Then we have the stock exchange over there, and they do interact. And sometimes when there's that interaction, that's where the challenge becomes, because you have to balance somewhere. So when we just made an announcement, which is very relevant to what has been asked, we got a call from a lady from Blaawai. She says, I had a clothing account at Edgar's, and I had almost a small balance left to pay off. But now the interest has just become minimum 200%. And if they are going to apply it, I won't be able to pay off my account because the interest component now has gone up. So this is quite relevant. And it is, we would understand because we sit down very regularly to look at these policy positions that we put forward. We do adequate consultations with the stakeholders, also with our principals at the Ministry of Finance. Then almost a Pareto optimal position is taken ultimately. That would save the rest of the economy. So we are aware of the challenges to do with the interest rates. They were meant to address certain issues that were occurring at that point in time. I would rather have a very stable economy so that we can just sit at the Reserve Bank and not worry or lose sleep over anything. That is our wish. But there are also instances where we have to take a policy position, and you would have realized that when that policy position was taken, it brought stability somewhere. And that's what we were trying to do. So the interest rates, I think there was a fundamental problem where people were able to borrow, play in the other market, and then pay off easily in the market where they would have borrowed. So that was what we were trying to do. And we are aware of this. And from an economics point of view, what we meant to address was indeed addressed. And it's very important for the rest of the industry. We know it can be painful in some instances, but ultimately the objectives we meant to achieve as the Reserve Bank actually were realized.
So no policy is going to make everyone happy.
Indeed, yeah.
Another question I have here. Is there a system that enforces banks to have appetite for our Scotch cards as collateral? I fear we might register, but no appetite from banks.
No, thanks very much. Yeah, earlier on I indicated that as Reserve Bank, we are not prescribing the assets that should be taken by our institutions. The banking institutions, generally, they would come up with a policy that outlines the qualifying and acceptable collateral, which they can manage as well. So the microfinance institutions, especially those in the outlying areas, would be able to define the type of collateral they are able to take. In instances where Scotch cards are difficult to manage for a financial institution, they wouldn't take that. But there will always be other forms of acceptable collateral. The cattle, we have the chicken projects out there. Even the people deep in the recesses of the country do have stock books for their cattle. And I think if an institution is able to manage that, pay frequent visits to ensure that the cattle they have taken as collateral are there, properly managed, and things like that, they would be able to accept that as collateral. And I'm sure somewhere we would have some statistics, as unfortunately we just started. But later on, I'm sure I would be able to show you the various types of movable collateral that are going to be taken by our institutions. For now, I can't speak for our institutions whether they are going to take the Scotch cards, but there are many assets in that category that are acceptable and can easily be managed by the financial institutions.
Yeah. Thanks, Mr. Blue. Yes, ma'am.
Thank you for this mobile engineering. But my issue and worry is on the small scale or road poor farmers. Some of them, they live in areas where there is no roads network, the mobile network, and even the financial institutions themselves. What is being done to accommodate such kind of farmers? For example, this last season, there were some loans which were given by AEFC and CBZ, and farmers were supposed to come to the centers where these banks are, not for the banks to move to the farmers. So you find those farmers who are able to pay for their fares to come to the towns or to where the banks are, they're the ones who will be able to access those loans. What about those who are not able? What is being done to accommodate?
So thanks very much for that. That is part of the engagement process that we are going to be having with our institutions. I know the various financial institutions have different, it's a mixed bag of lending models. There are actually some institutions that have been able to identify agencies at business centers to represent them for granting loans. So it's a matter of the business model that an institution employs in its distribution of the financial services. And that approach of agencies would be very helpful. Then the issue of banking institutions failing to access certain areas of the country, I think that we shall be talking to our financial institutions about. And I think they are also aware about it. There may be certain constraints they may have been facing at that point in time, but they know that there is a huge pool of potential customers out there. And we emphasize that in our national financial inclusion too. So we'll deal with that as we go.
Also, maybe like also emphasize the issue of network coverage. These mobile network operators, because there are some areas as we speak, they don't have Econet network.
That's correct, yeah.
They don't have network. But the mode of payment from the companies, they'll say you should be registered maybe on Econet or
yeah.
you need one month, whatever.
No, that's correct. Yeah. So I understand that when I'm in my village, sometimes I have to climb a tree to get network. So I understand what you are saying when you say there's no, the coverage is very limited in some instances, and you have to identify maybe a location where network is good enough and things like that. And that type of network sometimes doesn't give you access to internet, perhaps WhatsApp or something like that. And it's a factor in the distribution of financial services that affects the distance we can travel.
In addition to what my colleague is saying, the regulator of mobile or MNOs is actually part of the stakeholders, our stakeholders under the National Financial Inclusion Strategy. And these are some of the issues that we are engaged in and we are currently discussing. So we are hoping that, like I indicated earlier, remember I said, as the central bank, what we are doing is coordinating, but implementation of NFIS will be done through various stakeholders. So it's identifying a particular stakeholder in a particular area and saying, here are the challenges as far as your sector or constituency is concerned. What is it that you are going to do? So this is part of the initiatives under NFIS 2. And we are hoping and looking forward to an improvement in terms of connectivity under NFIS 2. Because for us, digital financial services is a major driver of financial
yeah, that's correct, yeah.
Thank you. Lance, you had a question?
Yeah, thank you. I was just interested to know how up-to-date the credit registry is, because there has been an increase in non-performing loans in the recent months, I believe. So is it real time or is it behind a few months or not?
No, thanks very much for that. No, it's not behind a few months. The regular update we have is the minimum is monthly updates from all the financial institutions. So every banking institution is supposed to update their records every month. We have noted that there is very little activity that happens on a loan in a week. But when it happens, then you get it updated on a monthly basis. Our system also has a provision for almost like online updates. If an institution, for example, is able to, has granted some loans today, we expect them to register those loans by tomorrow. But then the regular cycle for ongoing loans is monthly.
Thank you.
Yes.
Great. Well, I think that's looks like that's all the questions. We've exhausted that. So okay, just a comment. Thanks for the presentation to RBZ. Collateral register and credit reference systems are good initiatives, potential opportunities for farmers once the warehouse receipt system becomes functional. However, high interest rates remain a serious challenge. May the RBZ give an update on how land is being used by banks as collateral. That sounds like a bit of a hard one. Elephant in the room that will need to be resolved. There you go. There's the elephant.
No, so no, thanks very much for that. So there is, of course, do banking institutions to begin with, you would rather have land as security, the buildings, our title deeds. And I think it has been an ongoing issue being discussed between the financial sector, government, and also the farming community. I noted that there have been some positive developments in the recent past. They may not have really concluded on that, but I think we should all be happy with the progress that they've made so far. So I am not an authority on that, but I am aware of the positive developments towards maybe finalization of that issue.
I think you had something else to say?
No, I said, no, if the video is 3 minutes.
Is it working? Okay, great.
So it's just 3 minutes. If we have 3 minutes, then we can be able. Yeah, thanks very much.
Thanks. Mr. Chair, thank you very much.
Do you need a loan to start or expand your business, but you are having challenges accessing funding because you do not have collateral acceptable by most lending institutions? The Reserve Bank of Zimbabwe has taken initiatives to establish a collateral registry for movable assets in order to expand the range of qualifying collateral accepted by lenders as part of the broader reforms to promote access to finance and enhance financial inclusion. The Collateral Registry, which is a component of the financial infrastructure, facilitates the creation and perfection of movable security interests by lending institutions and provides a platform to notify other parties about the existence of security interests in movable property. The Collateral Registry is established in terms of the Movable Property Security Interests Act, Chapter 14 and 35. The registry facilitates lenders to register notices of security interest in movable assets such as agricultural products, industrial and commercial equipment, durable consumer goods, household items, motor vehicles, inventory, raw materials, amongst others. How it works. Borrower approaches lending or credit institution. Lending or credit institution searches the Collateral Registry. Loan approval and agreement. The lending or credit institution registers movable collateral with the Collateral Registry at the Reserve Bank of Zimbabwe. The borrower keeps title and possession of movable asset. The lending or credit institution has priority over the asset in case of insolvency or default. The registry is accessible by users such as banking institutions, deposit-taking microfinance institutions, credit-only microfinance institutions, savings and credit cooperative societies, and other secured creditors to register a notice of security interest. Other commercial entities and individuals may also register as users to search the Collateral Registry. Benefits to the borrower. Increased access to credit. Enable MSMEs to leverage their movable assets to obtain credit for growth. Benefits to the lender. Remote access to the system. Reduced costs of loan administration. Benefits to the general public. Search the registry before buying goods to ensure that they are free from prior interest and are safe from being repossessed. Promote an inclusive financial system. In order to get more information on the Collateral Registry, visit collateralregistry.rbz.co.zw or www.rbz.co.zw. or contact us on collateralregistry@rbz.co.zw or info@rbz.co.zw.
Great, thanks very much. So once again, just a huge thank you to RBZ team for coming and sharing with us. We hope this is the beginning of a journey, and to see more interaction between our members and yourselves. Just some news, some association news. Our AGM, annual general meeting, is next month in February. So please take note of that, and we'll probably feature a forum before the AGM, likely looking at the FinScope study, which was alluded to in this presentation, and World Bank would be presenting that. So thank you very much. Thank you for coming along. It's been fantastic having such a good attendance today. So thank you.